Let's talk about what mortgages are. Let's talk about private mortgages. Let's talk about how this can work as a bridge loans, because we recently closed bridge loan. But you are telling me something else about bridge loans. Tell me about your business, please.
Okay. So, private money lenders are subject to real estate law, but we're not subject to any underwriting qualifications. So the underwriter is me, and I work with a fellow for many years, Adam Kahn, and we both make the decisions. But we can do whatever we want that makes sense, and we've done this for 32 years. About 32 years. Our portfolio is in great shape. Um, I think this is going to be the fourth recession that we're going into, and we really don't lose money. Although if we did lose a little bit money at the beginning, every recession we got a little bit smarter, and we're in just wonderful shape. We have a waiting list of investors who want to invest with us, and we don't even take any new investors. We haven't for quite a while.
Interesting.
So what we do is somebody calls us up and they say they have a loan. We ask what what kind of a loan, and based upon the description, within a minute, we'll say that sounds we would do that loan. It's subject to obviously the verification of what they're telling us, but we're primarily interested in the equity in the property. Um, so we can do all kinds of things. Like I remember years ago we did a loan. We did a 100% loan. Why? Because the guy had lived in this house in San Rafael for 9 years. He built a garden and he improved the property, and the property had increased in value. And he had an option to buy the property at the original price, which was cheap. So even though we gave him a 100% loan to cost,
Mhm.
our loan to value is probably 65%, something like
I
that.
see. So you use current value, not what when he
Right.
when agreement. Okay,
Right.
which makes sense.
Yeah.
But was it owner occupied property?
Uh, at that time, it was, yeah,
Really?
yeah,
It was before the change rules?
yeah. It was before, yeah, it
So
was.
section 32, what is called?
It wasn't Section 32 either, so
Ah,
it was years ago. But even on owner-occupied properties, often, not all the time, but often, we can find a legal way of getting around it.
yeah.
Um, so, um, um, but we're careful in following the law. I mean, sometimes somebody will say, "Well, that guy will do it," and he doesn't care about that. I say, "Well, if he wants to do that, it's up to him. He can lose his license. He can get sued. We don't do that kind of stuff."
Yeah.
But there's a lot of interesting ways of doing it, and we do all kinds of different loans. From
Describe to us, because I know that one of the areas is construction loans, for example.
Yeah, I mean, we just this is I probably shouldn't start with this one, but we did a $5 million construction loan in San Rafael. We loaned the well, I'll tell you actually, I think it's interesting. These two builders, these two Irish builders, they were really good craftsmen. They bought a piece of dirt, right, and then they took 2 years to entitle it, and they bought it cheap. They bought it for $200,000, and by the time they entitled it, um, they entitled it for 9 condominiums. It was probably worth about $1 million. So all of a sudden now they had 800,000 in equity. So we loaned them a $5 million construction loan on these 9 condominiums,
Hmm.
but you don't give them 5 million up front. So when we closed, I think we gave them about 400,000 or 500,000. Okay? And they built the foundation, and then they wanted another draw. But when they build the foundation, the property is now not worth 1 million; it's worth maybe 1.5 million, right?
Hmm.
So
So you're diminishing your risk
yeah,
by as they progress.
yeah, exactly. So the project took 2 years. They just sold the last condo, well, not the last condo to pay off our loan,
Mhm.
because each one of the sales were over $1 million.
I see.
So they're selling the last one for us this week, and then they'll own, the other four condos free and clear.
After they will sell it.
Yeah,
So how many total you said?
9.
9. So they sold 5, and the profit was in 4 condominiums left over.
Well, for the most part, yeah. I
Yeah,
mean,
but
yeah,
point is that
yeah.
what was the interest rate in those loans?
8.5.
8.5, which
Yeah.
is a good rate. Okay.
It was, yeah,
I want to mention something about interest rates, which is
yeah.
confusion.
Mhm.
People are saying it's high rate, especially when you talk about private money loans.
Mm.
We just recently did. It was bridge loan, which what I wanted to talk to you in the first place.
Mhm.
When people are buying new property without selling the old one, and we were able to arrange bridge loans with 15% down, which is very good, and the interest rate was 10.5%.
How much down did you say?
15% down,
15%.
15% down,
Wow.
and 10.5%,
Yeah.
which is sound as a high number.
Yeah.
It's everything relative. But I calculated for them, if they wanted to buy the property,
Right.
and if they will pay for next 2 months until they sell the home
Hmm.
at 10.5%, it's still it will money which was left,
Hmm.
given more than enough to pay this interest rate.
Yeah.
And there was difference between if you get in conventional loan.
Right.
In this case, as a matter of fact, they sold the home, and we're going to refinance. We're in process for refinancing, and the interest rates they're going to receive on a new loan,
Hmm.
1,600,000, we're going to be 5.625. So now it's if we do conventional loan, yes, we can get low rate, but you cannot buy property with conventional way.
Right.
So when people say, "Oh, it's high rate," if they made money on this transaction,
Yeah.
for who cares how much it is?
Yeah. It depends upon the borrower. I mean, some borrowers, but this is probably more business oriented, don't care how much they pay. They care how much they're going to make. So they don't say, oh, the interest rates are. They say, let me think. The interest rate is that. I'm going to make this, and I'll do it or I won't do it. But now on bridge loans, of course, a bridge loan by law has to be less than 12 months. However, and typically the bridge loans that we do, paid off in just a few months. But if somebody decides that they can't sell the property or they don't want to sell it or they change their mind, there's nothing that prohibits them from continuing to live there, even though we gave them a bridge loan.
I see.
Yeah.
So it's yes, there is certain restriction,
Yeah.
but no one really can enforce it.
That's
Basically,
correct.
yeah,
That's correct.
yeah, and
Yeah.
people make a decision. How about this owner versus non-owner? Because some people claim that it's going to be invest in property, but then in the end they decide to move in.
Well, that's okay. I mean, the law, the Reg Z, which is the truth in lending law, says it's the intent of the borrower.
I see.
So if the borrower says, I have no intention of ever living in this property, and they sign statements to that effect, they move in the next day, there's nothing illegal about it.
Interesting.
It's illegal if they say to you, oh yeah, I'm not, I'm just going to tell you that we're living there. Then they said,
Yeah,
I can't do it,
yeah,
So as long as they conform to the law, we're fine.
yeah, yeah.
And they can,
I have seen it not too many times,
yeah,
but yes, people claim it, and it's especially when there is a what is called 1031 exchange,
yeah,
when you buying investment property and you not paying taxes.
yeah,
But it's a question if they're moving in and later on, well, what can we do? They make decisions.
yeah,
Yeah,
yeah. We actually were sued once about 20 years ago,
really.
and the borrower was an elderly woman living in an old age home in Oregon, and she needed 24-hour care. And I wasn't as smart as I am today. And when they sued us, I said, well, she needs 24-hour care. She's living in an old age home. There's no way, she hasn't lived in the house for 20 years, and the city was going crazy because the house was falling apart. And we made them a loan, and it was a good loan, and they made a lot of money from it. But when they sued us, she said, this is the elderly woman, that she had the intent of living there. But she couldn't live there, but she had the intent. And we had it settled because we were wrong. I learned my lesson.
Interesting.
I learned my lesson.
Interesting. So pay attention what people are saying.
Oh, yeah.
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 But talking about high interest rate, I was cleaning my drawer and I found a very interesting document. It's World Savings Loan. Remember for World Savings? When I started mortgage business, this was my saver.
They were smart.
Yes, I was mortgage banker, but World Savings was the first one who introduced negatively amortized loan,
Yeah,
which
that's
was
right.
wonderful. People misunderstood them,
Yep.
and I could qualify a lot of people. We bought our house,
Yeah.
and I wasn't able to qualify. So I started mortgage business in September. In April next year, we bought our house, and of course, I couldn't get a loan. I convinced the seller to carry the loan, and we're paying 11% to her. Okay, at that time, 11%. My wife didn't sleep the whole year, thinking how we'll pay it off. So a year later, I started making some money, and it's doing mortgages, and I went to World Savings to get refinancing to pay her off.
Yeah.
And I found this piece of paper. It's remarkable. So what interest rate I got? It was March 7th, 1985, year after we bought it. Note interest rate, 12.592%. Modified interest rate, 10.75. All right. And people, look, I bought my house for 225,000. Now it's worth 3,225,000. It doesn't matter. We invested a lot of money. But the
Sure.
point is, this allowed us to buy this house.
Right.
And that's it. So it's opportunity cost.
Right.
If you can handle, this is why I suggested to my clients, pay 15% down and you have saved money because it'll give you money to pay for this. The people, it's confusing. Therefore, going back to private money loans, yes, its interest is higher than, let's say, conventional, but not always. It's not always. Sometimes in today's reality, rates can be quite high on conventional. It's not, nothing is conventional, but opportunity. You can get loans. We had a case, interesting, just now. I had a client who uh, he moved. He's disabled. He is dementia. So he moved out from his home, but to enable us to do reverse mortgage in this home, it has to be fixed. So it's dilapidated. I needed to raise money, and I needed his girlfriend moved in, but she moved in. She's not. She doesn't own it. She's a renter. In reality, she is a renter.
That's right.
Yeah. So what we and I tried different sources how to get money. Didn't work. And then Phil got in the picture. He said, "Can you do it?" He made decision on a spot, and literally she could get money within a 1 week.
You described it to me in less than 30 seconds, and I said we would do that loan.
Yeah.
Yeah.
And this is advantage of working with somebody like this. You need money right away. Your circumstances. He didn't ask for tax returns. He didn't ask for credit report. He didn't even need to have appraisal.
And we don't have a prepayment penalty either.
Yeah.
So
Yeah. So you see, all of those tools are available. People just confused, like my instructor was saying, whatever he was saying so many years ago. Yeah. I think I wanted to just introduce you the concept because we have different tools how to help clients. And private money or hard money loans are one of them.
Yep.
My name is Manny Kagan. I promise to help you. Thank you.